Hello, I'm Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. I would like to take a few minutes to discuss how the first full month of spring shaped up with regard to sales, listings, and prices reported by Greater Toronto Realtors. So the bottom line is that we experienced the best April on record in terms of transactions reported through TREB's MLS system. There were 11,303 sales reported, which represented a year-over-year increase of 17% compared to 9,660 sales reported for April 2014. Now obviously affordability has been a key factor driving demand, with the share of the average household income in the GTA dedicated to mortgage carrying costs remaining in check as borrowing costs have dipped to record lows, with many lenders offering aggressive discounts off of their posted rates. Now, even though there was a record number of deals reported, we could have experienced even more activity but for the sustained lack of inventory. So while new listings were up year over year in April, the growth rate was much less than that for sales. And this means that sales accounted for a greater share of listings and that pent-up demand continued to grow. So just to be clear, pent-up demand refers to the situation where we have households who are actively looking to purchase a home but quite simply can't get a deal done. There is not enough inventory in some neighborhoods around the GTA to meet demand. Now, growth in pent-up demand is only one of the effects of the constrained listing supply. The other impact, of course, is on home prices. Whether we're talking about the average selling price or the MLS Home Price Index, selling prices were up strongly last month on a year-over-year basis. The average selling price for all home types combined was up by 10% to $635,932. The MLS HPI composite benchmark was up by 8.4% over the same period. Now, given that TREB reports on price in a couple of different ways, it's important to explain the two. The average selling price accounts for all home sales reported by GTA Realtors. It's basically the total amount of money spent on home purchases in April divided by the number of sales. This means that growth in the average price can come from two factors: changes in market conditions and changes in the types of homes sold from one period to the next. On the other hand, the MLS HPI estimates the price of a benchmark home from one period to the next. So this allows for an apples-to-apples comparison of price growth that captures only the effect of changing market conditions, or put another way, changes in the relationship between sales and listings. So the fact that the average selling price grew at a greater annual rate than the MLS HPI in April suggests that the mix of homes sold this year compared to last changed in favor of higher-end homes. And this is in line with other recent reports pointing to the increasing popularity of luxury homes in the Greater Toronto Area market. If we break down price growth by home type, we see that for both the average selling price and the MLS HPI, low-rise home types like singles, semis, and towns led the way. This is not to say that prices were not up for condominium apartments. To the contrary, condo apartment selling prices were up well above the rate of inflation, even with the increase in listings resulting from record project completions over the last couple of years. The demand has been there to absorb a lot of this new supply. So there's still enough competition between condo buyers to exert upward pressure on prices. So with that, I think we have a good summary of market trends for April. I look forward to speaking with you again at the beginning of June. Thank you very much.
Brought to you by GTA Realtors.